Let me now bring on board a very special guest, Mr. Rakesh Jhunjhunwala. Mr. Jhunjhunwala, what a delight to have you on ET Now, sir. Markets are often considered as a true barometer of Indian economy. Indian economy is struggling, but markets are at an all-time high. Are you a bit surprised?
Well, I'm not. I'm surprised at the lack of retail participation and the fact that Indians keep selling. But Nikud, let me give you a word of caution that, the new high really will be a new high if it maintains itself for the next 4-5 days, which I think it will. So we're all happy that it's made a new high. But I think there's a lot of skepticism. There's no feeling of a new high. I don't see anybody celebrating in bars. There is no participation. Despite that, the strength the market has shown is quite surprising. I also feel that the market has an innate intelligence. It's a very open and fair market. So I'm hopeful market will build on these things.
Are you a bit surprised with the polarized nature of the market? Only 25-30 stocks are at an all-time high, whereas 80% of the market is sitting at a multi-year low?
Well, but I think the other markets will also join the party. Once things improve, people will be surprised at the speed at which they will join the party.
Mr. Jhunjhunwala, a lot of experts are also of the view that currently markets are going up only because of liquidity, and once Fed decides to taper, liquidity could fade away and that could have an impact on India?
Well, I don't know what could be the implication of the Fed tapering certainly affects the emerging markets. But one thing remains the fact that India is underweight. In the totality of the exposure international people should have, because if you see your GDP to, our GDP ratio to what should be our weightage in the international basket of investment, India is underweight. Whether you see it by market cap or you see it by GDP. So I see no reason why this underweight will not be correct. It is also a reflection of the confidence that, people, the investors are having in the Indian economy. I think we are going to have a party until December. So market is sensing more and more that Mr. Modi is going to be the new Prime Minister. I think that is one of the primary reasons why it's going up. Also, I think earnings in the export sector have been phenomenal. So there are reasons why it is at an all-time high. We are at where we were 5 years ago. I think earnings would have gone up 60-70% right there.
Rakesh, so do you think a favorable election outcome with the BJP government, that's going to be the next big trigger which will take the market higher from here?
I think that's what the market is sensing. And that is one of the reasons why maybe it's going up. Also, I think look at some companies whose results have not been very good. Investors are still holding on because they feel it's an aberration. Over a period of, say, 1 or 2 years, the growth will come back.
Do you think we have an economic bottom in place and earnings now have bottomed out, because in the short term markets could go up because of sentiment and liquidity?
Well, this is a 1-minute interview, it's not a half-an-hour interview. So what I said is enough. Bye.
Okay.